Ira?
Governor, there's a fair amount of comfort on inflation in this fiscal year, but if you read through the monetary policy report, there seems to be far lesser comfort on getting inflation to that 4% level. In fact, at one point on page 8, where you talk about accounting for HRA increases as and when they happen, you actually say that this may require a tightening of monetary policy stance. Just wondering then why at this stage are we moving towards even more accommodative policy, which is accommodative both on interest rates and on liquidity, when we seem to have a inherent discomfort on meeting our eventual targets, sir?
Well, as I said that after the amendments to the legislation and the associated notifications, the Act and the consequent 4 plus or minus 2 is what we have to endeavor for. In fact, if you read our March 2015 statement, that also makes that very clear. What we have identified are some upside risks, but there are downside risks also. If you see that range, when we talk about 4.5, it's very large. If I look at over the next 7-8 quarters, the government has introduced structural policy reform policies, which is of course done to ease supply constraints. There is larger investment in railways and roads, which will improve infrastructure. The ease of doing business. The proactive food management has played a crucial role in the past 2 years and will continue to play a crucial role in times to come. That there is an improvement in pulses supply, which has been the main contributor. And there has been a sharp improvement in competitiveness ranking. So while there are issues related to the upside risks, and we have always said that the direct impact of the HRA on the CPI will be looked through. So it's the highly uncertain indirect effects which we'll have to wait for in terms of both how the HRA is going to be implemented and then the consequences thereof. So it's in that backdrop where that risk has been identified. Indeed, there are some others also.